Hi there, my name is Will from KOSEC Kodari Securities, and today I'm going to be talking to you about the ASX 300 or the XKO and some of the technical indicators that we're seeing that could provide a little bit of clarity as to the future price action that we could be exposed to. By using technical indicators, we can prevent from further losses, but most importantly, we can time our entry point back into the market. With interest rates being so low, and also looking to go lower, as well as central banks looking to stimulate the economy, a point could be argued that the market is looking very attractive right now. It is at a discount, and there is a lot of academic literature that would support that with a low interest rate environment, we could see the market being quite bullish. So how do we know when there's going to be a reversal coming? And how do we avoid catching a falling knife? So we're going to today look at 4 indicators, and they're going to be used by professional investors as well as us here at KOSEC to time entry and exit points in and out of the market. Again, it's important to use technical analysis to understand market conditions, to find area of value based on past price movement, as well as to identify entry and exit triggers. Although the long term the market has been beaten down more than any other asset class.
So as always, any information given is general in nature and it does not take into account your personal needs or objectives. For further information, please visit our website, www.kosec.com.au. So let's take a look at what we're going to be going through today. So today we'll do a technical analysis of the ASX 300. Now the ticker code for that is the XKO. So that's all stocks in the top 300. Now a lot of institutions will use the ASX 200 as a bit of a benchmark. However, here at KOSEC, we like to move a little bit outside that and actually look a little bit broader to what's happening within the ASX 300. Now, why the 300? Well, those are the 300 biggest companies with the most market cap. One of the things they do have is they're a little more liquidity, got a little bit more liquidity in behind them. But on top of that, they are valued by major institutions. Normally, we look at any charts here at KOSEC on a 1-year time frame, certainly when we do the videos that we send out to you. But today we're going to do something quite unique, and we're actually going to give you an overall picture of what the XKO or the ASX 300 has done over the past 12 years roughly. So we'll take it all the way back to the global financial crisis, and we'll look at the movement through all the way up to where we're currently situated. Then we're going to zoom in on 2019 and look at any buy or sell signals that could have indicated that we could have used to maximize profit and minimize risk. And then finally, we're going to take it to the crux, which is going to be 2020, the 3 months that we've experienced in 2020. What are the sell signals that we saw that we could have allowed us to prevent further damage from coming when the recent correction that happened? And what was the index doing at the first part of 2020? So here we go. We've got the XKO and we've got it spread out all the way back to 2007. We had that bull run in 2007 and we've gone all the way down and we started things off with the big crash that happened in 2008, which was the GFC. And here we can see down on the right hand corner, we've actually got exactly what that drop was, 54% from its all-time high. So let's take a look at some of the drawings we've got on here. First and foremost, I'm going to draw your attention to the first trend line. Now this is one of the most, the bottom extreme with the most touches. So you can see that it touched here, touched there, broke through at that point there, and drew a new trend line, touched here, and broke through there. Now at that point, it'd be safe to say that that is when the market potentially is getting a little bit oversold or near the bottom of its range. Now you will also be aware that when you look at this, we don't actually have any RSIs drawn up, any MACDs, any volume indicators or stochastic indicators at all. The reason is that so much happens in the space of 10 years that these things will be going up and down very, very, very fast, and it just kind of makes it look a little bit messy. So we've just sort of focused on the price action, which is obviously our candlesticks. Every candlestick is 1 day. Then we're going to be looking at some of our trend lines, which we've been through here. Okay, next thing we're going to look at is the 200-day moving average, which is this one through here. Now, the 200-day is this big blue line in the center. Now, there's a lot of technical analysts that will support the idea that if a price is above or a chart is trading above the 200-day moving average, is a bullish sign. Okay, it's indicating potentially strengthening of momentum. And you can see here, when we cross it, trading above it, it tends to go up. Okay, when we see a cross, like we did through here, okay, where it crosses down, you can see that there usually can be something like quite a sharp kind of sharp decline. Now remember, the market tends to go up in steps, like so, and then it tends to go down in an elevator. So we need to be keeping a very, very close eye on what the technicals are telling us to time entry and exit points. These lines that I've drawn through here, okay, are Fibonacci lines. Now, obviously, we're going to be looking at Fibonacci's in another video, okay, but they're just key levels of support or key levels of resistance. When breakthroughs happen, it can be combined with other indicators to show potential entry and exit points. Down on this far side here, okay, I've actually drawn the drops that we would have been experiencing. So when we drop down to this level here, that was a 23% drop. We're currently trading a little bit closer to that 27% drop. The next stop is going to be at the 34. As you can see, that's a key level right there. And then finally, all the way down to the 54% drop that we experienced in the GFC. Okay, so let's now zoom in a little bit more, and we're going to take a look at 2019. Now, for anyone that was involved in the market, 2019 would have been an exceptionally fun year. Why? Because we had about a 20% increase. So we went up about 20% over the 2019 period. But how did we start? Let's take a look at, wind it back to how we actually started, because we didn't start by rising. We actually started by falling, and that was through 2018. Okay, you can see here, August, September 2018, we started to fall off the edge of a cliff in quite a big way. Okay, and we sort of started to very, very easily go down, and we actually dropped about 15%. This is about a 15% drop to this sort of point down here where we got a little bit oversold, and then we had a V-shaped recovery, and that V-shaped recovery actually turned into a 20% rise from there. So that was very good. So at which point would we have exited, or at which point would have we moved back in again? Because if we'd bought here, or let's say we bought right back here at this point, okay, we put our dollars in, okay, at that stage, okay, and then we went all the way down, and we're like, okay, well that's okay, I've got good fundamental businesses, I'll hold for the long term, and I won't move away, even though, maybe even if the signs are telling me to potentially move away, I'll hold that all the way down. By the time you actually got all the way back to this point, it was sort of by the end of sort of midway through April, maybe into May. So it was a very, very long time to have stocks that are going down or trading sideways. Now, for good investors, they understand that that's an opportunity cost. They realize that potentially timing our exit points here, getting out and then getting into something else in the meantime, and then re-picking that back up could be a wise decision. So at what point would have we decided to buy back into the market? Let's just say we moved away at this point. Let's just say we went all to cash. Okay, at which point would we have identified potential buy signals? So it's actually this green line through here. I've drawn it on the chart, this green line through there. We're going to look at our indicators, and we've got a number of ones that we're going to look at. First thing we're going to look at is the stochastic. Now, the stochastic is a forward indicator, meaning it will move first. Okay, so we can see here, we've seen a cross. Okay, and then we've seen a divergence between the two averages, or the long and short stochastic. Once we've seen that, then we next also see a northern cross or a bull cross through the MACD. Our volume, which has been very light up until this point, has now flipped to the positive, and our volume is getting more bullish, i.e. it's getting bigger. Okay. Then finally, we take a look at our actual price action, and we can see that we've come from being very oversold. Okay, we've gone up through the midline of the Donchian channel, okay, which is our technical buy indicator, and then finally we have seen our buy confirmation at this point right there. Okay, and as you can see, we've moved into a nice movement to the north. We would place our trailing stop loss just below this, the center point of the Donchian channel. And we may potentially have exited out sort of at around about the mid-March kind of area after quite a nice little rise. So, once again, stochastic is our first indicator. Then we've seen the MACD cross, and that is followed by a flip in momentum or volume. Then we've seen a cross of the center point of the Donchian channel, which is a technical buy indicator, and then we've seen our technical buy signal or confirmation at this point here. And that is where we would place our long position. Now, obviously, you might not need to place a long position on the actual XKO. It might have just been an opportunity for you to go into some major players or some big market heavyweights, things like CSL, things like CBA, some of the big four banks, something along those lines. So now let's take a look at where we might potentially look to reduce a bit of risk. Now, as I said before, we went into the market at this point here. We've obviously gone up quite nicely. But the thing is, we don't want to get caught up with any big sort of swings down to the south. So we might protect our capital. Now, as I've said before to you, okay, we would place our trailing stop loss on a lot of our stocks or even on the index as a whole if we're investing in the index along the center point of the Donchian channel. And as you can see, when it crosses that, it is an indication that potentially we could be headed down south. Okay, now there's no way of telling how long this is going to last for. Okay, yep, we traded sideways for a bit, but we could well have continued to go down through here. So let's look at what other confirmations we're seeing there apart from our trailing stop loss. Okay, which might not have worked if we were in a whole bunch of stocks, because they'd all have trailing stop losses at different times and places. So let's look at what our indicators are telling us. First and foremost, we are seeing up here, our first indicator to cross is the stochastic, the leading indicator, and it's gone from being up high, heading in a southerly direction, as well as across. Next thing we are also going to see is a cross on the MACD, okay, which is a technical sell signal. We're also going to see our volume switching down from getting less, so a less volume, and we're going to switch down to negative, so we're seeing a bit of a change of momentum through there. We're going to go up to our charts, and we're going to see that we've come off that top Donchian channel, okay? We've moved down south, we've actually broken through that center point. Again, at that point, we would look to make an exit strategy, or maybe even a lightning strategy, just to preserve a bit of capital in case there is further downside. So let's take a look at another buy point. Let's just say we saw this big drop down at the tail end of 2018. We see the market starting to pick up. At about this point, it's gone back to its highs again. Okay, and we're thinking it might be a time to re-enter back into the market, or maybe with fresh money that's just first and foremost moving into the market for the first time. This green line is another good buying point. Okay, and the reason we like it is because the market very almost showed another sell signal after that. Okay, but this buy signal right here, let's take it from the bottom. We've seen a cross from the stochastic, we've seen a cross on the MACD. Okay, we are seeing slight positivity in the momentum movement through there, and we've seen a cross of the center line, the Donchian channel. We've seen it touch that top Donchian channel, and we've seen it move into a positive direction. Now, true, at this point here, we have come all the way back down again. And I know what you guys are going to say to me. Well, Will, isn't that a technical indication to sell? Yes, it can be if you're just looking at this one here, because it did cross that and it crossed it quite bullishly. But let's sort of look at whereabouts else, what else is sort of telling us. We actually haven't got much of a confirmation through this. So we had one day where we went down below it, and the next day was a positive day, moving back up again. So in this case, we haven't really broken our trend line. If this is our trend line through here, we haven't necessarily broken that trend line. So you can see we're just using technicals to develop a bit of a whole rounded picture about what the next movements are going to be. However, moving on from our last example, this is a very good sell signal. This is pretty much the exact same thing, except for this time it has been confirmed. And I'll show you exactly what we mean by here. So first and foremost, we've had 3 or 4 negative days in a row. That's not necessarily a reason to sell. Please be aware, guys, that if you see 3 negative days in a row, it is not necessarily a reason to abandon ship. Okay, it doesn't mean that things are coming to an end. It simply means the market's having a bit of a pullback, which is a very good buying opportunity. So we saw it there, we've seen it there, we saw it there. It does happen, and it does happen quite regularly. On this one, we've seen 3. We've seen it getting very close to that center line of the Donchian. So at this stage, we're starting looking at our other indicators. Let's have a look at this one here. We have seen the stochastic cross. That will cross first. Then we've seen the MACD cross. And the MACD hasn't crossed just a little bit. The MACD has crossed quite decisively. And it is continuing to diverge apart or get further apart. We can see that quite clearly. So almost immediately, we've got confirmation that, whoa, this stock is continuing to pick up momentum and it's continuing to move down. At this point here, keeping in mind that our volume is getting quite light, okay, and it's starting to drift in. So we are starting to see that cross sort of coming. And at that point, we might decide, at this point here, we might decide that it might be time to exit out. We could either exit half our portfolio or all of our portfolios, or maybe just a selection of stocks, maybe take some profit off the table, because we're assuming that if we were buying down here at the buy signals, or even if we were buying here at the buy signals, at this stage, a lot of our stocks are doing a nice amount of profits, okay? And it might be time to just lighten some positions, take some money off the table, maybe reinvest into something a little bit more defensive at that stage. But the real confirmation that we're looking at, what makes this one different to this one, okay, is the touching of that bottom Donchian channel. You can see here, touches it right there, then trades underneath it and heads down, okay? It does not do it here. In fact, it's a very long way off. That's one of the reasons that this isn't necessarily a huge sell signal. It's maybe just a lightened signal, okay? This one here, we can see that there are a lot of indicators that are supporting potential depreciation in share price. So by this stage, we are sitting sort of September 2019, and we've had a very impressive run up. Okay, this is sort of around about that 15% mark, roughly. So we've had an impressive run up. Okay, at this stage, I think a lot of investors will be looking at that and thinking, wow, the markets might continue to run, okay, but we can see that we've had this bit of pullback here. We've had a couple of really big down days, and we've failed at this point to take new highs. So this is a stage where a lot of very, very astute, very savvy investors would be paying very close attention to their charts. At this stage, you'll be paying close attention to what's happening macroeconomically. You'll be in good communication with your advisory team, and you'd be looking very closely at what's happening on a day-by-day basis within the charts, making sure that we're not exposing ourselves to too much potential downside. However, as I said before, we have exited out of the market at this point, or potentially lightened, or maybe even exited out of some positions at that point. From here, we're getting very, very oversold, and at this stage, I'd be just sitting back on the hands and just sort of watching, does it continue to drop, or maybe this is a reversal. I know it seems this does not look like much of a movement. You might think it hardly worth it. However, this is quite a big drop. Okay, remember, if the market drops 1 or 2%, okay, even if it does that over a couple of days, there are stocks that will be far worse punished by that. You know, it's not uncommon to have some stocks drop 7, 8, 9, 10%. Even stocks that are large market cap within the ASX 200, we have seen drop big amounts when the market goes down. So at this point, you might have lightened, maybe locked in a bit of profit. Okay. From here, we're a bit cashed up. We're waiting for a re-entry point back in. Remember, one stiff down day does not mean that you should jump in, because if we jumped into the market at this stage, we could have been trading sideways for a long time, okay, and not necessarily the most bullish movement through there. So this is not, contrary to what a lot of people believe, this is not necessarily a buy signal or a buy confirmation. What we're looking for is a couple of indicators to line up, and they're going to line up quite a ways apart. So first and foremost, we're going to see a northern cross on the stochastic, okay? And we're going to see it a couple of times. We're going to see it there, and we're going to see it there. We're going to see it there. Not a huge amount, but we are going to see it here. First and foremost, we'll see that one there. That gets our ears pricked up and thinking, right, I'm looking for my buying opportunities. Next thing I'm going to see is a northern cross or a bull cross on the MACD. Perfect. That's exactly what we're looking at. And I'm going to combine that with the idea that volume's getting lighter and volumes then at that point switch. So these are all ticks. Next, I take a look at my price action, and I notice that I have come off being very low, and I've come off quite a big sell-off. So now I've moved through the center point of the Donchian channel, and my buy confirmation comes on this exact candlestick here. When we touch the top Donchian channel, okay, we've got the top Donchian channel lined up, we've got a diverging MACD, we've got volumes increasing, we've got an appreciating stochastic, everything is lining up quite nicely for that point there. And once again, we could run to the north for a little bit. Now remember, technicals can come around in one day, they can come around in a month, they can come around at any time. Just because something has run to its all-time high is not an indication that it can't run higher. And just because something's got down very low doesn't mean it can't keep going lower. And just because something's showing a technical buy signal one day doesn't mean that due to macroeconomic events, things can't reverse very, very quickly. So at this stage, remember, think about what's going on in the world at this stage. During this entire 2019, towards the latter part of 2019, think about what's going on in the world. Think about the entire macroeconomic environment that we've been faced with, and think about how these big swings down to the south It'd be great to be able to avoid and time ourselves away from. All right, so let's move away from 2019. Let's take a bit of a breather. Let's just sit back and look at 2020 now, because 2020 has been a very, very exciting year. Remember, at the start of 2020, we actually had a bit of a scare with Iran and America, with missiles, etc., and we got the famous tweet from Donald Trump saying, "All is well." Okay, and then from there we went on to a nice little rally to the north, and we were actually up about 5%, okay, in February, 5 or 6%. We were up about 5-6% in February. So we continued on this nice rally. Certainly, if you had exited out of the market at the start of 2020, okay, you could have missed out on quite a big run up to the north. However, at this point here, this big drop off, which is hefty, okay, what's come to light is the coronavirus, or COVID-19, okay, has come in, and at this point here, it started to put a little bit of a dampen on the prospects of growth in GDP. Okay, at this point here, things might start to get shut down, some stores might get closed, and at this point here, it's been declared a pandemic. And each time it happens, okay, we see things move into a negative rate even faster. Okay, but what are the telltales? For starters, let's look at what the lead up to that was and what technical indications are telling us, because at the end of the day, this here is looking very similar to this here, which is also looking quite similar to this one here. So remember, technicals are indications when a market becomes overheated and when potentially it might be time to just reduce a bit of risk. Remember, we don't know how long the fall is going to be, because at this point here, you might have said to me, well, Will, I don't want to exit out of positions just to save however much of a drop that is, okay? Or I don't necessarily want to exit out just to save that much of a drop, okay? I don't want to do it. I'll exit out in 2018 to save a 15% drop, but for this little movement, I don't necessarily want to lighten or move positions. However, the technical indications for a 5% or an 8% drop at this point here are the same technical indications that we're going to see for a 25% drop in here. They will be the exact same technical indicators, and we must know them and learn them well. So here, let's take a look at it. Keeping in mind, coronavirus sort of first diagnosed, or sort of first I've been talking about back here. So we were relatively unfazed for quite a long time. However, so the 24th of February, things really came to a bit of a head. Okay, a couple of days before that, we were still rallying quite nicely, and we started to ease off our top Donchian channel. Okay, we started to get sold off a little bit, moving into a negative direction. So remember, we would be looking at our stochastic and we'd be saying, wow, that is very high at the moment. That's not necessarily a problem, because you can see got high before. It's not necessarily a reason that we want to start viciously liquidating anything. However, it is high. So for savvy investors, we're pricking our ears up and we're thinking, wow, this might be an opportunity to potentially be a bit cautious moving forward. Maybe not opening too many more positions at this stage. Okay? So that's our first sort of indicator. Our second indicator is a MACD cross. Now this MACD cross is quite substantial, because it's a MACD cross that almost goes straight into a divergence. Almost straight away it starts moving apart, and as you can see, it is not getting any closer together now. So almost straight away we've got confirmation that this momentum is increasing. Okay, it is getting more. There is more momentum coming in behind that. Taking a look at the volume, and you can see it's petered out to next to nothing and then flipped into negative territory, which is surprising considering the index is doing so well for the year. If you're starting to see a whole lot of negative volume, negative movements, then you can look back to last price action. So we would look back and think, wow, that looks quite negative through there, negative volume. Okay, let's take it back to the last time that happened. Well, that was back there, and that was a drop. Okay, now it looks like it's a lot bigger than what it was back then, therefore might be more of a drop. So we need to use past price movement, past price action, sort of identify potential sell triggers. So we've seen our potential, and that is the cross of the center point of the Donchian, or the center line of the Donchian. We've then seen our confirmation, which is it touching the bottom Donchian. At this stage here, we would be fairly convinced that we could potentially be in for a rough ride from here, and it might be a bit of a confirmation that maybe it's time to move away. Okay, from that stage there, we would take a look down, and we would confirm that by saying, yep, We've definitely crossed on that MACD, and we're definitely moving further and further apart. So at that stage, we would look to start lightening. Now, if we got down here, would we still continue to lighten? Well, yes, because we haven't seen a convergence of anything at this stage. We're not really seeing any buying signals at this stage, and we would continue to lighten as we go down, because this has sort of gone into a bit of a free fall. But the indications that we saw here, okay, indications that we saw here, okay, are going to be the same indications that we see here, same for the sell signals here. Okay, it's just that this drop is a lot more than this drop was.
So what have we been through today? We talked a little bit about the market in 2019 as well as into 2020 and some of the price action that we are seeing now and some of the entry and exit triggers. So although long term the stock market has beaten any other asset class, we need to be prudent to know when to enter and exit so that we can maximize profits and minimize risk. Just being a long-term investor and ignoring the market conditions and not looking at past price movements as well as entry and exit triggers could be very costly for any investor. This information has been brought to you by KOSEC, Kodari Securities. Thank you. Have a nice day.